Welcome to the Passive Income MD podcast, where we talk about creating your ideal life through multiple streams of income. If you enjoy hearing about this stuff, make sure to hit subscribe. Now let's get on with the show.
Hey everyone, I'm joined by our good friend, Troy Eckard. He's CEO and founder of Eckard Enterprises. I'm going to let him kind of do a little bit of an intro. I always introduce him, but he always does a better job of doing so. I'm excited to talk to him today about things called working interests in oil and gas. Many of you have asked us so much about this lately, and I think a lot has to do with the incredible tax benefits that it offers to busy professionals like you and me, to physicians in particular. And we want to be able to take advantage of these things now. We don't always hear about them. We don't know about them often. But for those who have discovered the power of these in terms of tax benefits and also the great, of course, benefit of investing in these from a cash flow perspective, I've seen great results. And so we wanted to bring this to your community today. I'm excited to talk to Troy. Troy, how's it going?
Well, it's doing good. I'm sorry I'm on the road today, Peter. I'm in the airport catching a meeting tonight and then back home to Texas tomorrow. Everyone in the country is trying to figure out how to utilize this one big, beautiful bill to prepare for the end of the year on tax planning, investments, which direction we're going. So I've been at a major request to be all over the country talking to professionals like yourself about how we can start utilizing this OBB to our advantage and save tax dollars and make great investment decisions. So thanks for having me on.
Awesome. Incredible. I know you come to our community and offer so much value and introduce our community to a new asset class, but do you mind just sharing again, give us a one or two liner in terms of your experience in this space?
Yeah, so I started in 1985. This is my 41st year of being in oil and gas. This is what I do for a living. I've done it for 4 decades. I know I don't look that old, but I am. What happens is that our company made ourselves a niche in the market where we started connecting the oil and gas industry with private capital. You don't have to go to Wall Street. You don't have to invest in a hedge fund. You don't have to invest in private equity. Literally, Eckard said, let's create a vehicle that allows a doctor, a lawyer, a farmer, a rancher to directly own interest in mineral rights, oil wells, pipelines. And we perfected that over 40 years. And that really has been a significant change for investors like yourself and your audience to say, how do I get in the oil and gas space? And how do I do it where I truly can be a significant part of my portfolio or make a difference in my overall net worth? That's what we do.
I mean, I think a lot of people are actually intrigued by this, but they don't even know what the opportunities are. Now, we've talked in our community and we've talked to you a bunch about mineral rights. Now, for this particular episode, I want to talk a lot about something called working interest in oil and gas. And so for the beginners out there, for the people that are new to this, do you mind just sharing a little bit about what exactly is working interest in oil and gas and how does that differ from some of those other investments that we've already talked about, like mineral rights? Or royalties or those kind of things?
Well, let's put this in traditional real estate terms so it makes it easier for the audience to get a visual, right? So you might have one investment decision in real estate where somebody says, look, I found a great piece of property, land, raw land. I want a bunch of investors. Let's go buy the land. Let's entitle it. Let's get an architect, an engineer. Let's get it zoned, annexed. And that property is going to go from $10,000 an acre to, $10 a square foot because we've entitled it, made it better. That would be equivalent like buying mineral rights. You buy mineral rights, you start having improvement, maybe a wells drilled, you prove the oil and gas in place. So the mineral right owner, the landowner, has a significant lift in value and they get a piece of the pie. Well, then all of a sudden somebody comes along and says, well, great, I want to now develop that raw land. I want to put a hotel in the corner or big box, a Target or a Home Depot in the corner. Well, that would be the working interest equivalent. Somebody wants to actually put capital to work to go vertical and actually develop the resources on that piece of land. Oil companies lease those mineral rights and say, we want to drill a well and we want to go down and pull out the oil and gas from a well that we drill. And we're going to keep the proceeds from it, make profit from it. And we're going to actually have capital working. That's why they call it working interest. Our capital is at work. So you might have a land lease, you might have a developer, and you might have partners inside of either one. And at the end of the day, how you make the money is the tenants or the customers, or the retail or the rent that you get from all that vertical activity. In working interest, it was critically important to the country over the last 40 years that the Internal Revenue Service said, look, in the middle 1980s, when I started my career, we were running out of oil. So Congress has a way of directing money in ways that helps the country, and they give tax incentives and things they believe is worth the IRS not getting the revenue today, but getting it tomorrow by giving you tax incentives. So they say, okay, we want you to go left, tax incentives are left. Right now, with the one big beautiful bill, President Trump clearly stated, I want manufacturing. I want to bring onshoring back to the U.S. I want oil and gas exploration to be very, very important to the country for energy. So all the things that came out of the OBB had to do with construction, growth, and energy. So with that bill, he basically said, if you participate as an individual, high net worth investor, high income investor in drilling and participating in oil wells in the U.S., 100% of the money you invest starting right now, you get to take it right off your gross income. Simple example. I'm a successful doctor. I make $2 million a year. Troy comes up with a drilling program and says, hey, Troy, how do I invest? Well, there's a 5-well program. For every dollar you put in that 5-well drilling program, you take it right off your gross income. You put $1 million in, your $2 million income that's taxable goes down to $1 million. Day one. That's the easy part. The hardest part is finding somebody you trust that can actually go drill those wells and end up making you a very nice economic return in addition to the tax benefits. So it's really a great asset class, but Peter, I'll be candid with you. I've been doing this since 1985. Before horizontal drilling and before shale plays, we were hitting about 40% successful wells. That means if you went in 10 wells, 6 were dry. You know, I don't know very many gamblers in Vegas that sit at the $5,000 a hand table. They don't last very long. So it took a pretty hardy investor that could stomach the risk of exploration and working interest prior to the new technology we have. Today, I think Eckard's pushing close to 100 wells that we've drilled in the last 6 years. We had 0 dry holes. We have 1 or 2 that probably will take a little longer to pay out, but our performance record is about 93% return in under 2 years. So what that means is the IRS has still left in place this huge tax benefit. President Trump came out with his OBB and said, I'm going to even accelerate. Instead of taking 3 or 4 years to depreciate the equipment, I'm going to give you all the deductions year one. I'm going to force you to drill because I'm going to reward you. And on top of that, the oil and gas industry is using all the technology that Elon Musk used and everything else by saying, we're going to drill 2, 4, 6-mile wells in the ground and go pull out oil and gas with virtually 100% success rate. So I get big taxes, big returns. What a great day it is in the oil and gas industry. That's great. One downside. Every single person who couldn't tell you which way a drill bit can turn has now entered the oil and gas freight. The lanes are crowded. It's guys who started the company a week ago, a month ago, a year ago, no track record, no performance. So now you have this great advantage for high income earners. You have this really big pressure and reward by the IRS and by the government. Now you got to decide which horse is the right horse to get you across the finish line so you get the tax benefits and you make a good, nice return on your money. That's going to be the difficult part.
I mean, that was a great summary. It's funny, before meeting you, probably the extent of my working interest experience was, like you mentioned, there was always that idea that, you know, drilling for oil is just like a crapshoot. It's a big gamble. Like, I still remember even this video game that I had back then. It's like a video game where you would go and try to, it was like back in like Atari days or something, where you would try to drill and try to find, it was this game, because most of the times you were going to lose this thing. And so that was my thinking and understanding of working interests. You know, before I talk to you about some of the new technology that's come in place that's allowed you to like create that amazing track record when it comes to that. Can you talk a little bit about that? Because I think that's really fascinating. Like, people are like, oh, I hear that today, but why? Like, why is it now so much, why has the technology allowed us to be so much more successful, or you more successful in finding opportunities there?
Yeah, so let's use the city of Las Vegas as a visual example. So, you know, we get out 100 years ago and somebody goes to the desert and says, I'm going to put this city in the middle of the desert. And everybody goes, are you out of your mind? So you have this huge blanket of sand, and everybody says, well, you go put it right in the middle, and there'll be just enough water and just enough resource, we can start this big city. Well, that was vertical drilling. You go look at this great big piece of property, you shoot seismic, you do all the things geologists, geophysicists would do. You say, where do I drill? And here was how difficult it was. The equivalent of a 7.5-inch paper plate you take to a picnic was the size of the hole. I need you to drill that well straight, hit exactly the target of that dried riverbed that was buried 100 million years ago, and do it with a less than a 50-foot deviation of variable, right? With equipment that's 30 years antiquated. Well, you had a lot of dry holes. You had a lot of human error, a lot of mistakes. So it was tough. So you got an ample reward, but man, it was brutal. What changed is none of the engineers, none of the geologists understood it wasn't the city of Las Vegas. The entire desert had the highest content of organic material. It was, how do you go drill a well, expose that 7.5-inch wellbore, and you go sideways 1 or 2 miles. Now a single horizontal well, 2 miles long, is like 200 to 300 vertical wells in recovery of oil. Bingo. We have a 200x, 300x recovery. And they said, well, it's still sand. I don't see water flowing through sand too good. They said, well, let's do this. Let's go in and drill it, and then let's frack it. Let's create natural pathways that allows the oil and gas to move. And if we do that, we have the perfect answer to unlimited amount of oil and gas in the U.S. That's a very simplistic analogy, but that's what happened. I mean, my brother drilled wells for 35 years before he retired. What happened is he would always drill these vertical wells. He'd get to these hard shale formations. They'd be a 500 to 1,000 foot thick. And he'd go, this shale is so tough. It has all this oil and gas. It's so tight. It won't flow, but gosh, it's loaded. But man, it causes drilling problems like crazy. That's all I heard was complaints about. The very thing they complained about was the map to all the treasure. So due to technology, due to the price of oil going up to $145 a barrel in 2008, the oil companies finally said, we have enough latitude in profit. We have enough latitude in financial gains. Let's start spending the money in R&D and let's discover how to make that big desert flow. And they did. Now we're the number one oil producer. So here's what happens. You and I get to Nevada. We stand on the mountains that surround the desert where Las Vegas is. And the question becomes, can you find sand? Oh, yeah. All I got to do is stay in this basin and I find sand. The question then becomes, who has the expertise to hire the right drilling contractor? Who has the ethics and integrity to offer it at fair terms? Who has a track record that proves they've done it, they keep doing it, they know what they're doing, they're successful? And who's going to be able to put together a system that allows individual investors to go drill wells that cost $10 million at a time? That is where Eckard has perfected our business over the last 40 years, by being that conduit that brings a very large industry down to the level of a single doctor, lawyer, or farmer that can put in $100,000 and participate in a multi-million-dollar drilling program. That's what we do. That's what I've done for 40 years.
Hey everyone, I have a quick question for you. Are you looking for a secure and reliable long-term investment strategy? Meet Eckard Enterprises. It's a family-owned and operated firm with over 35 years of experience specializing in U.S. energy and alternative investments. Here at Passive Income MD, you often hear me talk about the need to diversify. One of the safest investment strategies available today are mineral rights. And with Eckard Enterprises, you can diversify your portfolio. Their team is committed to helping private investors like you and me identify and develop successful, diversified portfolios. With an average return on investment of over 24% across their portfolios, the Eckard team is dedicated to helping you build and protect your wealth through long-term passive income. All of this while minimizing the risks associated with traditional investments. So check out Eckard Enterprises. If you want that great investment experience, go to eckardenterprises.com. Again, that's eckardenterprises.com. What if you could catch PIMD Con, the Physician Real Estate and Entrepreneurship Conference, without booking a flight? The PIMD Con 2025 virtual ticket lets you join live from anywhere. Grab your friends, your team, or colleagues, and experience the event together from wherever you are. You'll earn CME, watch every featured session via live stream, and get lifetime access to the recording so you can rewatch anytime. You'll also get access to our vetted sponsors and partners online. So if you decide to act on an idea, you know exactly who can help you put it into practice. Now, after the conference, we're going to keep it going with PIMD Con Encore Nights, where I'll host small group breakouts, live speaker Q&As, and targeted networking, all done virtually. So bring your questions, get real-time feedback, and leave with a plan you feel good about. You don't have to experience it all alone. Now invite your friends, your team, or colleagues to join you online and save up to 50% with group ticket discounts. Now we've packed this year's agenda and I couldn't be more excited. So if travel's not in the cards for you, I get it, but I still want you there. The virtual ticket really is the next best thing to being in the room. So grab your virtual ticket at PIMDcon.com. That's PIMDCON.com. See you online. Now back to the show. We talk about different alternative investments, and again, I think the tax benefits are probably the thing that draw people to this the most. However, something we've talked about so much in our community is tax benefits are great, but it's secondary to the actual making sure that you're making a great investment, right? We always have to follow that principle. For this, I'm just curious what it looks like then. For somebody who's investing in working interest, again, results may vary, but what should a typical investor expect in terms of when would they start to receive some sort of benefit, just or distributions or whatever that might be? And then what does that look like from a timeline perspective, from a return perspective? I know it can be, again, vary a ton, but what are most investors in your community seeing?
Yeah, so let's just use a simple $100,000 decision. So we're going to go do a $50 million drilling program, 5 wells at $10 million a piece. You decide, well, I want to be in it, but I want to put in $1 million, or I just want to start with my toe in the water at $100,000, $20,000 per well, 5 wells. We'll take the capital today. Our drilling rig's actually out in the field drilling right now. We'll drill the 5 wells between now and, let's say, Thanksgiving or Christmas. We'll complete the wells by stimulating with the frac. We'll turn them to sales probably in February or March. You'll get your first check in probably June or July. That first check is normally about 60 to 90 days worth of production. The good part about these types of wells is they're like taking a 3-liter Coca-Cola bottle, shaking it, and then opening it up. Because we frack it by over-pressurizing it, we get a lot of reserves in the first 90 to 180 days. Our average first check runs between 18% to as much as 35% per first check. Our first year distributions have been running about 45 to 60%. Our overall returns in 24 distributions is 92% return. No one even can touch us on our track record. Now, why does that happen that way? There are other people that are offering investments to high net worth or high income investors in the same kind of horizontal drilling. But investors will put in $100,000 and they haven't got their money back in 5 years. Why is that? Because what they'll do is take a $10 million well, they'll take a small piece of it, mark it up 4 or 5 times the actual cost. The uneducated investor doesn't know that. You write a check for $100,000, but you only bought $20,000 worth of interest. So that well can be a monster record-setting well, and you're wondering, where's my money? With us, the way we do it is we take the largest interest in the well. We have millions of dollars invested in leasehold and interest before you ever become a partner. Because we take the lion's share and we have our own team, we have our own geologists, engineers, professionals, we have VP of drilling, have our own contract drilling, have our own tank fabrication business. We're in the business of making money out of the well. Now watch, this is very, very simple for your listeners to understand. I want you to focus on this. It's hard. There's 50 brand new promoters in oil and gas. The tax write-offs are the same for a dry hole as they are for a good well. So just assume if you're working it, you're going to get all those tax write-offs President Trump gave us. Okay, that's a given. That's a freebie, right? What you have to focus on is the fundamentals of due diligence. Who's been around 5 or 10 years? Who has a track record? Who puts up their own money? Are the terms fair? Are the terms disclosed? Is there transparency? Can you show me that you've done this the last 5, 6, 10, 20 years, right? So it's just pure investment decisions, right? It's no different than if you and I had a guy approach you and me, Peter, and goes, hey, I'm going to build this brand new hotel in this hard corner. We go, really? How many have you built? Oh, no, this will be my first one. Well, how many have you managed? Oh, I've never even slept in a hotel. You and I be like, yeah, get away from us. We're not touching it. But because of I call oil and gas romantic. It really is. I've seen the eyes of my clients and they are like, I'm in that well and this is exciting. And I see the oil and man, the rig is enormous. And I go, it's almost like going to Disneyland, right? Because very few high net worth investors actually own direct interest in oil wells. You go to your country club and go, okay, everybody raise your hand. Who owns an oil well? No hands are going up. Who owns mineral rights? No hands go up. So if you walk in and go, oh, I'm with Eckard and I got mineral rights and I got oil, it's like, well, how's that work? Well, man, you've been across the ocean. You've seen the Taj Mahal. I haven't. Well, what's it like? The problem is it's romantic. What it really is, though, it's an incredible asset and tool. It is the greatest tool I've seen in 4 decades of investment expertise that says, I can take what I owe the IRS and I can delay paying that by investing in oil and gas wells. I'm going to take $1 million. I'm going to put it in oil and gas. I just saved $370,000 in taxes. I'm using their money. Those wells come online in 12 months. And then I take next year's income plus the income off the wells, 40 to 80% return. Next year, I put $1.8 million in. I do that over 5 years. All of a sudden, I'm sitting on $6 to $10 million in reserves, and I made virtually all my money back inside of 60 months. And the reason that's important is if you can defer the taxes you owe, so I like to call it deferral versus deduction. Let me explain to your audience. I think it's real important. When the IRS says you get a tax deduction, what is it a deduction based on? You losing money. You get a depreciation because your asset's going down in value. You get a deduction because we expect you to lose. We're going to give you credit back off your income because you took money from your income and lost it. With the way drilling is today, it's not a deduction. It's a deferral. I know my wells are going to be successful. I know I'm going to make my money back in 48 months. I know I'm going to get to compound that. The idea, though, is because of the deferral reality, I'm just pushing the can down the road of when I may one day owe the taxes. I hope it's after I'm dead and my wife's new boyfriend pays my taxes because I don't want to. So I just want your audience to understand it's not like it was 10 years ago. There's still as many sharks and crooks and liars peddling oil deals out there as there ever has been. But as an asset class, this is the amazing part. If I were the IRS, I probably would suspend the tax write-off because they gave us the write-off because it was so risky. Now I'm hitting 100% of my wells and I'm still getting a write-off 100% of the asset? Keep your mouth shut. Don't say a word. And I'm going to add one other thing, Peter, you don't even know. In the last 45 days, we have actual budgets per well. Our investors invest directly at cost. If it costs a little more, they pay a little more. If the cost comes down, they get a credit money back. In the last 30 to 45 days, the cost of our wells has dropped by almost 25 to 30%. $10 million wells are now costing $7.5 million wells. Why? There's not as much drilling. The service companies are hungry. So it's changed the entire economics of working interest. Now, when I write a check for $1 million, I'm getting like $1,250,000 to $1,500,000 in value. And that window is probably wide open for the next 12 months. Why? Prices are modest. Revenue's down to the big companies. They've laid down drilling rigs. And whoever has the courage and foresight to participate in working interest, you just got a gift with 100% write-off with a combined reduction in exposure and capital of 25 to 35%. The economics are better. The taxes are much better. And guess what? You can drill the wells today. It's probably the best I've seen in 40 years. If I said, hey, let me take the 5 things that make my business better, let's put it all together, today's the day. And it's pretty exciting.
I have to ask you then, why do you think, you did mention, I mean, again, when I talk about some of these things with other high net worth individuals, physicians, just, casual talk, whatever, again, it seems like not many people know about it, or they kind of know about it, they've heard about it, but they just don't feel like they have access to it. Why do you think that's the case?
Well, here's what I've always believed. So I started when I was 20, and I didn't understand it either because I'm a very visual person. I mean, like if I want to know material, I'll pick up an encyclopedia back in the old days. I get online, do a lot of research because the more I know, the more comfortable I am about what I'm about to do. And I can kind of see it's like a ruler, 0 to 12 inches, right? If I know what's really lousy, it tells me when I find something really good. There's no single source for any individual to go to and say how to invest in oil and gas successfully. Now, I always believed the oil industry didn't want money to know how it works because that's how they got them to fund money. Like we pick this big old grandioso picture. We're going to find Saudi Arabia type oil, give us $100 million, right? If you educate the money may go, well, I don't like what you're doing. I don't like the terms. The flip side is the oil industry starves to death about every 4 years because they treat money like they're ignorant. Well, that goes all the way down to the private high net worth investor. You take any company out there right now that says, hey, Peter, I want you and your group to invest in this well. Well, what's it cost? Oh, that's not important. It's turnkey. Well, when are you going to drill? Not important. Well, where's it located? Not important. Well, how does it work? Show me the mechanics. Show me. You're a doctor. You've gone 12, 14, 15 years to become an expert at what you do. So you like data. When somebody doesn't give you data, your first inclination is, yeah, I'm not interested. And I think that's the real problem. There's a real bridge that never has been made. So I do the opposite. I drive my partners crazy. As you know, I send out 3 to 5 videos a day. I educate you on pipelines and drilling and working and everything else because why? I firmly believe that when I finally get a high income, high net worth person to slow down and listen, they go, it's not as complicated as I thought. It's not as difficult as I thought. But why is Troy Eckard and Eckard the only one that does that? Very simple. If you're really good at what you do and you have the true sincerity of the end result, making money for your clients, I'm going to tell you everything. I'm going to tell you everything I know because why? I want you to be the smartest investor so the other 45 crooks that started up in the last 12 months don't have any chance of getting your money. Today is a day of technology and information. You can find more about drilling today online than ever before. How does a horizontal well work? You can see videos and all kinds of schematics. But, you can give me a tinker toy set, but I don't know how to put it together. That's why investors back away from oil and gas. I don't know how it works, so therefore I just leave it alone. If you can take the time and patience, not much time and patience, and look at what Eckard does, look at our track record as a company, look at our track record of what we do, you say, okay, I finally found a 101 educational company that will let me tiptoe into an investment asset class that I should definitely be in. If you're making over $300,000 to $500,000 a year, you're not drilling wells, you're making a massive mistake.
All right, well, Troy, I really appreciate your time on this. Again, this is a very, very interesting asset class for people that are looking for not only benefits in terms of cash flow, benefits from good returns, but they're also looking for the tax benefits. I know we talk a lot about in our community using real estate to do that. And I will say that many people have found that there's another way to do that through these investments. Again, they can think about it from a real estate lens, and there's a lot of those comparisons that you mentioned, which I think makes sense to a lot of people in our community. But just like anything else, everyone, this is a powerful tool. Like, you got to understand it. You got to spend the time educating yourself so you can understand how this might fit within your portfolio. So just look at your overall strategy, educate yourself. Troy, where can people find out more educational material? I know that you provide a ton of that.
Well, just go to our website, eckardenterprises.com. We created the most advanced app for investors called Eckard Insights. And when you get on there, I mean, there's hours and hours and hours of videos. I'm going to make it real simple for everybody listening. Here's how hard working interest is. You talk to me, talk to one of our wealth managers. We explain what we're doing. You get comfortable, you write a check. You're going to get 12 distributions a year, one every single month on the 20th of the month. And you're going to get basically a 1099 for your income and a Schedule C for your tax write-offs. What that means is just because your money's working doesn't mean you're working. You still get the same passive. You sit back, you do your thing, go to the beach, take vacation, make money. We do all the work, 12 checks, a 1099 for your income, and a Schedule C for your tax write-off. If you decide after 3 or 4 years, hey, I got my write-off, I made my money, I'm okay, you can always sell it through a 1031 exchange and go out and put the money back into something else that qualifies like traditional real estate. This asset class has never been more attractive than it is today. And it has greater tools for high income, high net worth investors than it's ever had before. You should really take the time to find out about it. And if we happen to be somebody you're interested in, let us know through the app, let us know by contacting us. Otherwise, what we want to do is meet many of you at Peter's conference coming up. And we also want to let you know we're here for an information source. If you just need questions answered and we're not the company we work with, we want to make accredited investors smarter. We want to protect you from other bad investments. And that really is a sincere effort that I do every single day.
All right, Troy, as always, you come chock full of information. I think in a short period of time, I think people say these are the most high value talks that we have. Again, it was a lot of fun talking to you. People should reach out if they have any questions, want to find out more. But in any case, look forward to seeing you soon. Let's do this again.
Okay, buddy. Have a good week. Thanks, man.
All right. Thanks, Troy. Bye.
Enjoy the show? Let me know by dropping a review in the podcast app you're listening to us in. And if you haven't already, make sure to hit subscribe. Join thousands of physicians who are also on this journey to creating their ideal lives through multiple streams of income. Learn more at our website, passiveincomemd.com. Thanks again for allowing me to be a part of your journey. See you next time.